Hello guys, welcome back to YouTube channel of Castaway Trader. Today's video is called Reviewing My Predictions ES Mini. Before we start, I would ask you to read that important disclaimer. This is how my website looks like, www.castawaytrader.com, and I wanted to show you that I have just added an additional page. It's called Nailed, and it is located under the main menu Market Analysis, and if you click Nailed, you will see an actual examples of my reports sent to subscribers, and you will see how specific I was with my prediction and what happened then. So if you click to Nailed, you will get an access to this page and you will see examples of actual reports sent to my subscribers in the past. The reason I'm recording this video is that recently I got 2 questions from my followers. And let me read those questions. I'm interested in subscribing to ES and VIX service. Impressive calls you're making. Thank you so much. But I don't fully understand the terminology. Is your service mainly targeting those interested in learning specialized Elliott wave methods? And this is another question. Are your alerts specific? I read that a lot of sub-services can be vague in terms of levels, etc., which can leave them open to interpretation, and almost that the provider can be in a win-win situation afterwards. Simon. Thank you, Simon. I've already answered those questions to my followers, but then I decided to record a video because those questions sound pretty important for many of you. And basically there are 2 main ideas in those 2 questions. The first idea is how good you are and would I be able to use your reports in my personal trading, how specific you are. Another question probably is even more important because I personally used to be a subscriber of those many services and I know what Simon meant when he asked that. We are gurus which would pass the report, and when at some point when it's time for your mentor, a trader whom you follow, to show you strength, instead he would tell you, by the way guys, I want you to understand there is another possibility here, and instead of coming down as we expected, it can go up, it can go through that resistance, and instead of a decline, we can get another rally. And I know personally people who do that and who build big businesses, who keep charging people hundreds of dollars each month, and for some reason, people still stick to those services. But I think my service is different, and I'm going to show you my actual reports I sent to my subscribers over the previous 8 days. Just to be very specific, I only would show you reports regarding ES Mini. I normally send out reports regarding TWIX, which is the ETN fund connected to VIX. I sent reports about Russell futures, Nasdaq futures, and ES Mini futures. And of course, ES Mini is the most popular product. This is why I picked ES Mini, and I will be talking about ES Mini in this video. Let's start. I'm going to show you actual charts, so you will be able to answer those questions from my subscribers by yourself. You will be able to understand if I'm specific enough for you to follow me in your trading, and if I'm vague enough or if I'm certain enough, and how I behave in different market environments. Let's start. And we are going to start from last Friday, May 10th, 3:15 p.m. This is what I wrote to my subscribers, and this is the chart I sent to them. ES has played another A up rally yesterday. This is what I mean. Followed by B down. This is B down. Drop in the morning, followed by wave C up, the current rally. As you can see on the chart attached, that ABC is entering a supply zone. This is the red target box, this is a supply zone. If you watched my video yesterday, you may know I consider that ABC as a wave X up. The video I'm mentioning here is a video I posted on YouTube with two bears on the cover, so you can watch it. It's publicly available. This is a corrective rally before another decline, therefore I would be cutting longs in that red zone. Is it specific enough? I think so. And I'm looking at A up, B down, C up, where B made a lower low and C is going to make a lower high. Again, Friday 3:15. You still have plenty of time to trade that specific report. And this is what happened. We can see that price went all the way up to the external border of that red zone. Again, nobody on earth can give you a specific price all the time where price will reverse. Here we had a target zone from 28.80 until 28.9250, and in this specific case, price found resistance at the outer edge of that zone. But a great rule of thumb for you, even if you wouldn't follow me, if you use Fibonacci extensions in your personal trading. Remember, 100% extension is what everybody knows and which does not work. It doesn't work all the time, so it's in very rare cases 100% extension would be an actual resistance. So normally it would extend to either 123.6% or 114.6 or 109.2%. And this is what I use. But sometimes 100% still works. This is 5 p.m. on Friday the same day, and this is what I wrote to them. ES has set another bull's trap. My expectation is that we should get another ABC down structure. A down, B up, and C down. That ABC down may target 2800 level. This is Sunday, 6:53 p.m. This is what I wrote. After Friday close, I posted a long post explaining that the market had to decline again in another ABC move down. On Sunday evening, ES Mini opened with a gap down. This is the gap down. This is that red target box. I don't draw it here anymore because it played out. It's not relevant anymore. On Sunday evening, ES Mini opened with a gap down. This is the gap down. Most likely, that is the start of the first subwave, parenthesis A down, from that expected final ABC down structure. That current decline in wave A most likely targets a new lower low in 2820-2800 neighborhood. At that point, ES was traded 2865. And here I'm giving a very bearish outlook that it will keep following for at least 40 points lower, maybe 60 points lower. Was it specific enough? Ask yourself. In my opinion, it was specific enough, and here I gave only one scenario. I didn't say anything about that would drop unless it will go up, as many well-known traders and well-known educators do. I tried to explain why I am bearish. I try all the time to explain to my followers what fractals are in play, because I want you to learn. I don't want you to blindly follow me. I want you to understand my reasoning. And even if you don't want to waste your time and energy on subscribing to my video course, on learning the course, learning the theory, if I keep doing it all the time, if you are subscribed to me, or even if you just follow my free post, I believe that you will be learning that stuff automatically. I bet that many of you not only want to trade, but they always want to understand why. And I try to explain why. So in this particular case, I explained that we've been playing so-called 333, a corrective structure which is composed of three ABCs. Look, ABC, this is 1, ABC 2, ABC 3, and those three ABCs are interconnected by two corrective moves in direction of the main trend, which is up, direction of the main trend, and direction of the main trend. This is wave X and this is wave double X. And I showed to my subscribers the location inside that corrective fractal. We are here, meaning that I expected that move down to continue to 28 or 28.20, then a corrective B up, and then the final decline in wave C, which would complete the whole corrective structure, and that could be the start of a new rally targeting new higher highs. And again, my goal is to explain why. My dream is to make you proficient in harmonic Elliott wave theory, and after some time I hope that you will be more educated, you will start to recognize those patterns, and it will be you who will be contacting me and drawing my attention to some interesting setups in stocks or futures. This is my dream, this is why I'm recording those videos. Let's continue. Monday, May 13th, 8:33 a.m. So you can see that normally I first post every day. I first post at 8:30 a.m., 1 hour before open of the US market. So all times here are Eastern times. We can use the first decline in wave A down after the previous corrective wave X up, 100% of that old A down. So what I meant here is that in order to project a potential bottom of that drop down, and as you can see on Sunday we were here at 28.65, and by Monday open at 8:30 we were 40 points lower at 28.28, so it was like a straight drop. I suggested to use that drop here, because you may remember I showed you that corrective structure composed of 3 ABCs, and here was a similar wave A after a corrective wave X up. We have just completed XX up, and here we were working on a similar A down. So what I did, I just measured that A down and I projected it from the top, and I offered two projection levels, 100% and 123.6%, two most common projection levels I keep seeing every day. And this is how I get the green box. Again, this is not a rocket science. It will not take you hours to learn my method. It's simple, and this is why it works. Okay, so at the open we are 28.75, and what I'm showing here to my followers and subscribers is that it is too early to cover shorts and it is too early to stop buying longs Monday morning. So it's Monday noon. We can see that price indeed dropped lower up to 28.10, and at this point it's deep inside that green target box. So I wrote to my subscribers, as expected, ES dropped to 28.20, 28 support zone. That is wave parenthesis A down, and we should get a corrective pullback in wave B up targeting 28.45, 28.50 before the final decline in wave parenthesis C down. So here was a suggested trade to buy in the green target box in order to sell here, and basically it was about a gain, potential gain of 35 points. Monday 3:08 p.m. we see that we started to get rally from here, but it was kind of a lazy rally, a weak rally. I wrote, ES corrective wave B up has started. The target for wave B up is 28.40, 28.50. This is the resistance of the upper channel. I'm talking about that bigger channel, downward slope channel. But it can go all the way up to 28.70, to the edge of the unfilled gap down made on 12 May 2019. I give two potential scenarios, but look, both scenarios point into the same direction. I'm telling them that the rally should keep going up and it can stop either here or there. What happened just in 20 minutes? We got a sharp drop. But I kept the same view and I sent out another alert because I understood that my subscribers probably freaked out and they started to question my count. What I said is, yes, that drop looks like a corrective micro B down of B up, meaning that I still had that red target box, and every move under the harmonic Elliott wave theory has to be subdivided into ABC. This is A up, B down, and this is C up into the red target box. Yes, I did not expect such a drop here, but I maintained my bullish view and reaffirmed my view to the subscribers, saying that we still should get that rally. Question is, are my reports ambiguous or not? And frankly, I do hate ambiguity. Sometimes I do not have certainty in my prediction, and this is when I tell frankly to subscribers that there are several scenarios are on the table, and this is probably not a great time to trade. We just need to wait until 2 or 3 scenarios would point into the same direction. They can give us different targets, but what we really want, we want a situation when 2 main highly probable scenarios would say that, for example, price is bottoming and it should reverse and go up, and even though those 2 scenarios would project different potential targets for that rally, we still have win-win situation. It's the only question how much money we're gonna make on that rally, if it goes up 50 points or 70 points. In my opinion, it's allowed ambiguity, right? Because this is a limited ambiguity about a potential profit. It's not a situation when I give you 2 scenarios saying like, you know what, we can get a rally from here to 28.50, but at the same time there is another scenario where it can drop to 27.50. I try not to give reports like that because I do hate ambiguity. I used to be a subscriber of services like that for years. I wasted my own money and I don't want to be the same kind of guy. Let's continue. Monday, May 13th, 10:58 p.m. So this is, by the way, the time, 10:30 p.m., 11 p.m. Eastern time, when I post my latest update for the day for those who would trade overnight, or for example, for those who would trade an overnight Asian session. And I reaffirm my bullish view, saying the ideal target for that rally would be 28.45, 28.50. Again, inside that corrective wave B up, we got A up, B down, and we still should get C up higher into that red target box. From there, I expected another drop to lower lows. Tuesday, 8:08 a.m., my first post of the day. ES, no change in the count. I would like ES to keep grinding higher, at least to 28.45, to complete that expanding flat corrective structure of the wave parenthesis B up. Type of a structure we have here when we get ABC pointing up, but the wave B in the middle makes a lower low under the start of the first leg up. It's called expanded flat. It's a tricky one, and normally the goal of the tricky corrective structure is to shake you off. If you don't know that fractal, you will be freaking out here, and most likely you will sell your longs here because it dropped under the low made here. So if you put your stop here, we will run your stop and immediately go up. This is why I strongly recommend you to learn that methodology, because you don't have many fractals to learn, and those fractals really help you in day-to-day trading. It's not like a pure theory. This is a really practical stuff you will be using every single day, and I'm here to help you. I always refer to those fractals, helping you not only to learn them faster, but to incorporate them into your actual trading. Tuesday morning, 8:08 a.m., I keep reaffirming my bullish view. And Tuesday, 10:45 a.m., 2.5 hours later, and price kept moving up. So now it's 28.37, and again I say here ES is approaching 176.4 extension of wave A of B up. Normally wave C up in wave parenthesis B stretches to 176.4 or 223.6 extensions. Sometimes C may stretch to 276.4 extension. Again, is it ambiguous or not? I cannot give you only one level, because all those levels are just combinations of different extension levels and retracement levels and trend lines. And here I give you the highly probable target, and it's not like I gave it here. I gave it here when price was 50 points lower. You could buy and you could have just hold them to make those 50 points. But at the same time, I kind of give you a hint that it can move higher and you can hold part of your position, and you should be cautious shorting that box, because you may see that up to that point I did not talk about shorting that move up. Tuesday, 11:44 a.m. This is exactly how wave C inside the corrective ABC pattern plays out. It comes for all the shorts, making them cover. At this point, I would be unloading longs from yesterday. ES is hitting a common 223.6 extension of wave A. This is 223.6 extension. This is 2850.32. So basically, you can convert it to the level applicable to ES trading, which is 2850.25. And you can see that I not only show you those boxes, I kind of help you to make your trading decision. I tell you what is reasonable to do in that particular case, and in this particular case I say that probably it's time to unload longs. Again, at this point I do not talk about shorting that move up. Tuesday, 10:23 p.m., the very last update for the day. So we can see that price targeted 2850 something and it dropped. And what I wrote is, this corrective wave B up looks completed. It has a clean structure of an expanded flat, and its wave C up tagged a common 223.6% extension. So at this point, I thought that the rally was over, and we started another decline in the final parenthesis wave C down. Tuesday, May 14th, 10:55 p.m. 3 minutes later, after the previous post, I posted another post because I felt like I see a micro setup. I said ES micro setup for a drop. ES, as long as ES holds on the 2850, it has a nice micro setup for a drop from here. So that was a short setup, and that was the target for the drop at 2812. And that happened on Tuesday, 10:55 p.m. This is the first time when I suggested a short trade setup here after we bottomed in this area. Wednesday, 8:48 a.m., the first update, and we can see that the price was dropping the whole night, and it dropped to 28.23 from 28.44. So it dropped over 20 points overnight right from that setup. This wave C down should make a new lower low under the low at 28.02 made on 13 May 2019. At this point, I was pretty sure that it's a good start of that expected decline, the final decline in wave parenthesis C down, which would have completed the whole corrective structure of the top made on May 1st. This is another update, the next update at 9:16 a.m. the same day on Wednesday, and we see that price kept moving lower, 2818.50. And what I wrote is that this drop of the top made yesterday has to be structured as 5-wave fractal. This is what I meant. Normally, all wave Cs are subdivided into 5 waves. 1, 2, ABC of 3, 4, 5. This is why I added those labels to the chart, so you would have an idea of potential paths lower into that final decline in wave C of double Z. And at that point, I was sure that that final wave, parenthesis C down, would keep going lower to a new lower low. Again, it's Wednesday, 9:16 a.m. 2 hours later, we got a strong rally, which I totally did not expect. And this is what I wrote to my subscribers. I did not expect that strong rally. It was supposed to be a pullback in a microwave for up. So I expected that we will get some ABC up and it will continue lower from here. But we have got something really different. And at 2:44 p.m., I wrote, I count that move as the second leg high in that corrective wave B up. We discussed that previous corrective waves pointing up retraced 76.4% of the preceding rallies. We had a special post about that, and I reviewed how high that corrective wave after the first drop would go, and this is where I added those retracement levels. And we noted that unfilled gap down here as a strong magnet. So at this point, I had to change my view. So my original view was that ABC move up was all of the corrective B up. And from here, I expected another decline, the final decline in wave C down. And we started the decline which followed really well that expected 5-wave fractal, but suddenly it reversed and turned into a strong rally which made a higher high. And at this point I had to confess I was wrong, but it's not enough, right? If I tell you, guys, I was wrong. I have to give you an alternative view which would explain you what's going on. It's not that I need to find a reason to explain you that I'm still correct about long-term expectation. My main goal to find the highly probable scenario, and if I'm right about that scenario, so that scenario should offer you new high probability trading setups. This is how I perceive my own goal. And at that point, I recounted that whole fractal. I still counted it as wave A down, and I could not count that move up as any impulsive wave structure, meaning that a bunch of ABCs just did not look constructive to tell you that, it looks like we bottomed here, and from that point we started a new rally to higher highs. It still looked corrective. It still looked like a bounce, and I still expected that after that bounce gets completed, we will get another drop which would target a new lower lows. Wednesday, 8:50 p.m. So we got A up, B down, and C up. But that rally, because it's another wave C up, did not look complete, because any impulsive rally subdivided into 5 waves should have a well-pronounced wave 4 counter-trend wave followed by the final push down. It's like here we can say it was 1 down, 2 up, 3 down. Here we have 4 up, and then final ABC down and wave 5 up, or we can count it as this low as the low of wave 3 and ABC of wave 4 counter trend move, and only then the final push down, which would generate so many divergences in oscillators you may be tracking. This is why you do not need to use indicators if you practice Elliott wave theory, because you know that any 5-wave move will be completed only after counter trend wave 4 followed by the final push in wave 5, which would make a lower lows, but which would be shorter than wave 3. And all the divergences you see on your indicators is just the consequence of the composition of that fractal. If you know those fractals, you do not need to use indicators to spot those divergences. You can see the divergences with your naked eye because you can see that the slope of the decline is not as steep as the preceding drop in wave 3 down. Now let's come back to the chart. At this point I expected another higher high, and I still did not see any good setup either in up or down direction. Thursday, first update, 8:18 a.m. As we expected, ES stretched higher to 76.4% retracement in the first leg A down. So what I meant is that was first leg down in wave A, and normally if you expect a pullback of that low, you add retracement levels. You measure the whole distance covered by that wave A and you add retracement levels relevant to Fibonacci numbers. In this case 61.8%, 76.4%. Now we can see a nice completed microstructure of wave C of B up. Again, it tagged the red target box here. 11:14. Yes, I do not trust this spiky type rally. First, I cannot get a completed pattern into the last low. I meant that off the top I wanted to see A down, B up and C down targeted a new lower low. Second, even if I forget about that problem and if I focus on the structure of that rally, I'm talking about that rally, I have even bigger problem. This move up looks like a corrective WXY structure that fits the count where it is a corrective wave parenthesis B up. What I meant is WXY structure is a structure composed of several ABCs. ABC up, which is labeled as W, ABC down, which is labeled as blue X, and the final ABC up, which is labeled as Y, and together WXY comprise a corrective wave parenthesis B up. Again, at this point we sliced through the red target box. It got stronger than I expected, but I still had a valid count, a valid bearish count. Yes, 28.96 is a strong resistance. Want to share with you another chart of ES where I see a confluence of fib extensions and previous pivots at 28.96. I added several extensions, I measured wave A, I projected it from the low of wave B, and I put here two common extensions, 114.6, 123.6. Again, I do not use here 100% extension because in majority of cases it just does not work. Again, I maintain here a bearish view that the price would go down, but as you can see, I do not suggest a short trade at this point. I'm saying we are hitting resistance, but at this point I'm not convinced enough to say that let's go and short it. Thursday, May 16th, 9:59 p.m. That pullback down of the top made on Thursday looks like a microwave 4 down in that final wave C of B up. I meant that rally in wave C started here should be subdivided into 5 waves. 1, 2, ABC of 3, and here I counted as A down, B up and C down of microwave 4, and I thought we should get another push higher into that red target box. And at 9:59 p.m. on Thursday, I posted my last post was, believe it or not, but this thing gonna tag 28.96 tomorrow and that still be bearish. That pullback down of the top made on Thursday looks like a microwave 4, which is what I just explained you. That means we still may get the final push higher in microwave 5 to test that 28.96 resistance level. And I was wrong about that. This is what happened the very next morning. It just dropped hard. At this point, I didn't have good idea of what's happening there. At this point, I do not have a good micro account to explain that drop, and I stick to my primary scenario, which implies the top we saw yesterday was a corrective wave parenthesis B up. As you can see, as you may remember, we started from the previous Friday, and I said that from here we should get A down, B up, C down. I nailed that move up to the penny. So I said that it would drop to 2817 to 2800. But from here, I expected much weaker bounce to that red target box. And we got that bounce and we got a drop of that bottom. But from here, it started to go up again, and that was completely unexpected by me. And I actually acknowledge that. From this point, even if I got wrong, I did not turn into defense mode. Again, my goal was to explain, based on harmonic Elliott wave theory, what was going on, and probably to find a new entry point regardless of the direction. I was not anyhow married to my bearish scenario. My goal was to find a fractal which would be reliable to play. Friday, May 17th, 11:15 a.m. ES, a short setup with a tight stop. As long as ES stays under yesterday's top, it looks like a short setup with a tight stop. We got wave 1 down, inter open, followed by a corrective rally in wave 2 up. From here, it may start dropping again in wave 3 down. Here you can see that I'm getting very specific. I'm not talking about resistance, red target box. Here I see a specific setup. And yes, I do not get that confident every day. And trading is not about trading every single move in the market. Trading is about looking for a familiar patterns which you have traded before many times and which you can see by your naked eye at a glance. This is what is high probability trading. Friday, 11:15 a.m. and this is what we got. We got a drop for more than 20 points which stopped right at the close of Friday. It was 28.6125, and when I made that bearish call it was 28.86. And as you can see, this is what happened over the previous 8 days with regards to ES in my private room. And you can make your own conclusions, whether you like it or not, whether my calls were specific or not, whether my calls were accurate or not enough for you to subscribe and follow them. Again, I want to give you a bigger picture. This is the fractal I showed to my subscribers on Friday, May 10th. I told them that we were at the top of that corrective XX wave. I expected drop down in wave A, which is what we got, then followed by a corrective wave B. We got that corrective rally as well, and that was Monday 13th of May, and this is where we were on Thursday 16th of May, and finally we closed Friday here. If price keeps following that fractal, which it has been following for more than 2 weeks by now, we should get a continuation of that move down into a lower low under 2800. This is my primary scenario. But as you have seen from this video, sometimes price does not do what I expect. Then I'm looking for another fractal which would explain what's happening, in order not only to explain you what happened, but also to show you a potential trading setup. If you want to join my service, you can go to my website www.castawaytrader.com/register or just castawaytrader.com, and you just click register and you can pick one of those plans. All the charts I've shown you in this video were from micro accounts of the US indices plan, which goes now for only $24.99, and that price would go up to $29.99 from June 1st, 2019. Finally, I really recommend you to stay on the path to mastery. What I mean is that find one methodology and try to learn it, try to overlearn it, try to automate it, try to make it your only main instrument, because if you keep using only one methodology, you would get proficient in that methodology. You would become a master. Don't try to change methodologies one after another one, because if you do that, you will never get proficient in any of them. Thank you very much for your time. Please like this video and subscribe to my YouTube channel. That means a lot to me. Every new like would make me work harder. I would record more videos, and hopefully those videos will help you to improve your own trading. Have a great weekend.